Inflation, a word many Americans have probably heard but don't quite know the definition of, is back. That's right, according to offthegridnews.com, inflation is on the rise and is driving the biggest price increase in nearly 4 years. According to Chris Christopher, an economist at IHS Global Insight, consumer prices have gained momentum in recent months, and this is not the best thing in the world for lower income households living paycheck to paycheck. Scott Anderson, a chief contributor for Forbes.com, predicted our current predicament with inflation nearly 6 months before it actually came to fruition. In his blog post, Time to Prepare for Inflation, he highlighted the emerging signs of consumer inflation. Some of these signs included a tightening labor market and increase in energy, medical, and housing costs, among a list of other things. As is evident in today's consumer prices, Scott Anderson's hypothesis seems to have come to fruition and will probably continue as we note new developments in the economy. Since Mr. Anderson's article about the emerging signs of inflation, recent monthly consumer price index values show an evident increase in consumer inflation dating back all the way to September of 2016. But before we get involved any further with the current state of inflation, it's important for you to understand what inflation actually is. So, inflation in the most general form is usually described as a rise in the average price level of goods and services, or a decrease in the purchasing power of a standard unit of currency. In simple terms, inflation means that your dollar does not buy quite as much as it once did. Now, let me try to put all that into perspective for you. So, for example, the United States Bureau of Statistics indicated that from 2003 to 2013, the cumulative inflation rate in the United States was approximately 26%. So what that means is what cost you $1 in 2003 would cost over $1.25 in 2013. And this increase can affect a multitude of items ranging from a calculator to gasoline prices, or even a burger and fries at Highway 55. And this percentage is calculated based on the Consumer Price Index, which was mentioned when I noted the new developments by Chris Anderson, the Forbes journalist. So now that you know what inflation is, what exactly causes it? Well, economists normally agree that there are 3 main factors that cause inflation. The first and most common factor is known as demand pull inflation. So broken down to its most simplistic elements, demand pull inflation happens when consumer demand for products is greater than the supply. Sellers must raise the price of their products in order to avoid sellout. Also, another factor is called cost push inflation, and this is created more on the seller's end. So sellers raise their prices in an attempt to offset increased production costs by raising consumer prices, and that's called cost push inflation. And lastly, money supply expansion can also be a factor in inflation. As more money is allowed into the economy, either through fiscal or monetary policy, it doesn't really matter, inflation can occur as consumers have access to that additional money and will more than likely spend that on more goods. According to a CNBC article, a bigger than expected 0.6% jump in the Consumer Price Index last month pushed the annual inflation rate to a 5-year high of 2.5%. Though still well below levels leading up to the Great Recession several years ago, the pickup in the pace of inflation has renewed the pressure on millions of consumers around the United States. John Schoen, a CNBC editor, believes that the surge in gasoline prices drove consumer prices higher last month. And when I say last month, I mean January. Now, I'm sure that this information that you are all dying to hear, but why is this important? How does inflation affect you and me, the consumers, and why should we care? Well, as I stated earlier, rising consumer prices is a big issue that can stealthily rob unsuspecting citizens, especially retirees or investors, of real returns. So there are a number of other obscure reasons for why you should care, but the price hikes caused by inflation are by far the biggest issue for you and me, the average consumer. I began this talk by quoting an article from Chris Christopher on the current statistical state of inflation, and I mentioned the coming to fruition of an inflation article by Scott Anderson. Since then, I defined what inflation is by definition and by giving you an example from the 2003-2013 era. I gave some insight into the chief cause of inflation, then I revisited the statistical aspects of inflation as reported by the CPI, or Consumer Price Index, and CNBC to acknowledge why average consumers should care about the economic process of inflation. Well, is inflation really back? I guess that depends on perspective. Are there higher levels of inflation than seen in the past few years? Well, yes, but we are nowhere near the amount of inflation seen during the Great Recession. So the answer to that question is kind of.